In the metals quadrant, February gold futures hit an all-time high today, 9 weeks since the last all-time high. The low today was 43.38, down 0.82%, and the new all-time high is 44.0950. That's up 0.81%. As we come into the close of the future session, the rally is not holding. Gold is down 0.21% with a little bit of time left. With one trading day left in the week, gold is poised to complete its second consecutive week of higher prices, as well as its fifth week in the last 7 of higher closing prices. This morning's CPI, the Consumer Price Index, contributed to both the early drop and the late rally of gold. November CPI showed headline inflation up 2.7% year over year, below the plus 3.1% forecast and down from September's 3% print. Core CPI rose 2.6% year over year, which was also below the 3% forecast for the core and below September's print of 3%. Month-over-month figures weren't available because the government shutdown canceled the October data. Now, this data shows slowing inflation. Investors often buy gold as a perceived inflation hedge. So, no inflation or slower inflation means fewer gold buyers and lower gold prices, and an incentive for the Fed to cut rates again. Many people think rate cuts by the Fed directly leads to higher gold prices. That's the confusing you're seeing in the trade and in gold prices today. Also, central banks are starting to diverge from the US FOMC, pressuring Treasury yields lower and lending support to gold. This morning, the Bank of England delivered what many expect to be its final rate cut, and the ECB held rates steady, pausing its easing cycle. And markets also expect the Bank of Japan to hike their policy rate this evening by 25 basis points. That policy mix conflicts with the Fed's stance and is helping push Treasury yields lower. When yields fall, the opportunity cost of holding non-yielding assets drop, which often supports gold as investors look for more price appreciation. We'll know in the coming week if that's actually the case here.